Hey guys, Dave Keller here with Market Misbehavior. I love to ask interviewees what their one chart would be. And that is, if you had one chart, just one chart, besides a regular chart of the S&P 500 as a way to understand the broad market environment, what would it be right now and why? So here is my one chart for today. So today's one chart is the Walt Disney Company, ticker DIS. And it's an interesting chart, number one, from the perspective of the outlook for the company, the outlook for the stock, and the recent earnings beat this week and what that means for long-term potential appreciation, but also because it illustrates the concept of follow-through or confirmation. So let's start with the chart itself. If you're looking at the chart, we've got the last 1 year for Disney. And as with many stocks, sold off obviously from February down to March. What's a little different about Disney, though, is it actually peaked out last November. So November of 2019 was the highest price here. It was just over 150. It sold off and bottomed out just below 80, so almost a 50% drop in the stock altogether. Since then, right from the March to April period, you can see that it appreciated back and it hit resistance the first week in June, along with many US stocks. What's interesting here, what's a little compelling, is that peak in June actually lined up really well with the low from last October. So that was, sort of that last pullback before the final move higher into the November 2019 peak. And that's an interesting phenomenon that you find a lot in charting, where resistance becomes support or becomes resistance, and that's what we've seen here. Now, what's happened this week is Disney reported earnings earlier this week, surprised to the upside, and as a result, the stock gapped up from around 117 to around 123 or so, and from then rallied and closed above the close from June. This upswing this week pushed the stock above its 200-day moving average for the first time since February, right before the market top. So what's interesting right now from a pure technical perspective, a couple things. Number one, it's now trading above this key resistance level. And so if it's able to hold that, then that suggests, to me, I think from a technical perspective, certainly a strong potential for a return to the previous highs and upside to 150, which would be a decent up move from here. What's also interesting is if and when it would pull back, you have some clear support levels in mind. So I think the risk reward is pretty well defined. So you have potential support right here at the 200-day moving average, which was the upper end of this gap with the earnings win from earlier this week. So essentially, you expect upside to 150, and you could see potential downside to, in the short term, down to certainly 124, 125, which would be the 200-day moving average, the upper end of this gap. Further below that, you could see support around 115 on a deeper sell-off, and that's the most recent swing low from late July. The stock's overbought, which is pretty common when you've had an earnings release and a surprise to the upside and a gap higher in price that the stock would rally. Becomes overbought. Reasonable to expect a bit of a pullback once this gain is completed, once this gain is digested. But at this point, it's continuing to go higher. The second reason why I wanted to bring up this chart is the concept of follow through. I featured this chart on my show on Stock Charts TV called The Final Bar yesterday evening, and basically pointed out that the company beat earnings, the stock gapped up, the stock is now above resistance. But when you have a big move like this, the next day, the follow through is really, really important. And what I mean by that is this. A lot of times you will find that key levels, key resistance levels, key moving averages will be broken intraday, or even the stock will close through that key level you're waiting for. But the next day, the very next day, it sort of comes back, and it just reverts back to the previous direction, reverts back to the previous range. And anecdotally, the reason you can attribute that or what you can attribute that to is basically, once we've reached the level, there's no buyers left, or there's no buying pressure, buying power enough to push the stock higher than that level. It had just enough gas to get to that point, and that's about it. And you'll often find a whipsaw of sorts when a stock hits a key support and resistance level. I think a lot of times that's what perpetuates some of those key support and resistance levels. People are expecting support and resistance. In some ways, it can become a self-fulfilling prophecy. So what you want to look for after a big up move is a follow-through day, or what I call a confirmation day. So a further close, a further move demonstrating that there's more momentum, and especially enough momentum to propel the stock to further upside from there. So arguably, again, today, this is, midday here on Thursday, so it's not done yet. This is an active bar, but if we do close above the previous day's close, if we continue to follow through, breaking around 129, even 130 plus, that would certainly, for me, give enough follow through to suggest that the bullish thesis makes sense and you can expect further upside from here. So that's the key. The chart, our key number one with this chart is the fact that Disney beat earnings. This propelled the stock above the 200-day moving average and above resistance. And even though it's overbought in the short term, which just recognize that it's gone up a lot, at some point a short-term pullback would be reasonable. Overall, I think it sets the stock up pretty well for potential for further upside. But reason number two for looking at this chart today is to teach to describe the concept of follow through and the importance. Once you break a key level of resistance or a key objective, look for follow through, look for confirmation, and arguably we're seeing that with Disney going into the end of the week. Thanks so much for watching. From all of us at Market Misbehavior, have a great day.